The dollar faces an uphill battle after extreme volatility comes into play with month/quarter end. So you would have seen in the back end of the session on Tuesday, things were very wild, extremely wild for all dollar related due to month/quarter end. Now, why do we see this? What are these about? Guys, FX is more than just what you're speculating on, okay? It's more than just speculation of the prices that go up and down. Real transactional foreign exchange is going on, right? That is Forex is going on. And in this case, why we've seen it affected or such significance at month/quarter end, let me give you an example. So we have fund managers, whether you're a pension fund, hedge funds, whatever, a large player. And these large players will have the requirement for foreign currency, for transactional FX, because they have a portfolio. And in their portfolio, they'll have it spread across different asset classes geographically. So let's stick with stocks, indices, equities. In their book, they may have a split exposure between UK, European, US, and Asian stocks. Say, for example, one particular quarter or a month period, a certain sector geographically, so as an example, the US portfolio performs relatively well. So these stock indices perform relatively well versus their peers. So what you'll have is you'll have this excess amount of dollars of profit, right? Of profit, because we're outperformed UK, European, and Asian stocks. So they'll have all this dollar profit, but they need to keep everything hedged and their books balanced. So what they'll need to do, this excess dollars that they've got, which is nice, a nice problem to have, they'll need to sell those dollars, sell those dollars and exchange them into another currency, whether it's GBP, Euro, or any sort of Asian currency, so that they divide it amongst the rest of that portfolio and keep things balanced, right? They want it balanced. They don't want an excess here or a surplus or a deficit, whatever. They want it all balanced. So that's why you see those outflows of dollar. Because look, as an example, if you look at US indices, the stock market has performed relatively well in comparison to its peers, over the last 3 months. We've seen NASDAQ at record highs. They've continued to pump, despite obviously all of the volatility in comparison to their peers. So hence why we've got this excess amount of dollars for a lot of these big players. And that's another reason as to why sometimes what we get, and we give it to our members when we do get it, is these institutional reports that give us this guidance. Let us know that, okay, where X, Y, and Z happen, it looks like this month end or quarter end is going to be tilted towards some dollar weakness, given the reasons that I just explained to you as an example. And so I hope that makes sense. And it has shaken things up a little bit in terms of the way in which some of the monthly candles for the dollar's peers have sort of closed. Could be set for a bit more dollar weakness, perhaps, particularly if we continue to see risk appetite. At the moment, markets are disregarding the fears of COVID-19 second wave. They're focusing on these big data rebounds that we've seen, which have been impressive. And whether or not the FOMC do more, perhaps that could take a bit of a weight, an added weight onto the greenback as well, if they pump more aggressively and take new measures. Other than that, guys, look, in terms of all of this fundamental knowledge, I've put it all into a course. Do not hesitate to check that out. Freaknetwork.io, click on courses, or check out our Become a Member section. You will learn a lot. Stay lit, let's get it.